Hello and welcome to the show. The incoming US President Donald Trump has called the US debt ceiling ridiculous. In this episode, I'm asking, is he right about that? I have some fairly strong views on the debt ceiling, having been involved in policy regarding the debt ceiling here in Australia. So we used to have a debt ceiling, so I'll talk a bit about the Australian debt ceiling and my experience with it back in 2008 when I was an officer in Treasury. I've been prompted to cover this issue because the debt ceiling is part of the ongoing debate about the US budget, which flared up in the week before Christmas. Congress had to pass a continuing resolution to continue the funding of the federal government. So the federal government agencies had sufficient funds. And part of the debate is the debt ceiling, the amount of debt that the US government can have on its books. So the amount of money it can borrow. And the debt ceiling has been suspended for a couple of years now, and it has to be renewed next year. So this is going to be an issue for the Trump administration. The US federal debt is well beyond the debt ceiling. The current debt ceiling is, I think it's around $31 trillion. It's 31.38 and a few other digits trillion dollars. So a trillion is 1 million million. So 31 million dollars. It's a big number. However, the US government has significantly more debt than that. The current gross debt is around 36 trillion. So when the Congress approves an increase in the debt ceiling, which it's almost certainly it will have to do to avert a major financial crisis, then it will have to increase the ceiling to accommodate the current level of debt plus additional debt that the US government will incur in future years, given that the US is still running very large budget deficits. So I think there's no doubt they'll increase the debt ceiling. And we end up with this, with these frequent debates over what the level of the debt ceiling should be. And there's a lot of political grandstanding over it. And hence we have Donald Trump saying, well, let's just get rid of it. Okay, so what is the rationale for the debt ceiling in the first place? The rationale for it is that it's going to enforce fiscal discipline of some kind. It will limit the amount of debt. Now, it hasn't really done that. In fact, the US Treasury website tells us that since 1960, Congress has acted 78 separate times, permanently raise, temporarily extend, or revise the definition of the debt limit. And that was 49 times under Republican presidents, 29 times under Democratic presidents. And the Treasury writes on its website, congressional leaders in both parties have recognized that this is necessary. Indeed, it is necessary because without borrowing the additional money, the US government wouldn't have the cash available to actually pay the bills, to pay Social Security recipients, to pay Medicare, to pay interest on the debt, all of the things governments spend money on. Now, the modern monetary theory people might say, well, the government can essentially just print money. And indeed, one of the ideas for getting around the debt ceiling is for the US Treasury to mint a $1 trillion coin. Of course, as I've discussed in other episodes of this podcast, I'm not a fan of modern monetary theory. I think that's a very, that's the wrong way to go about things, particularly because it's going to be inflationary. So assuming we're not going to follow modern monetary theory, the government does need to borrow money to cover deficits. And hence, if it weren't able to do that, and then if it ended up defaulting on some of its debts, not paying bondholders interest in time, then that's going to cause trouble in financial markets. I mean, it's hard to imagine what a default of the US government could do to both the US economy and the global economy. It certainly would be very bad. There's no doubt about that. And the congressional leaders, so they will politically grandstand, but ultimately they will have to change it. And hence, the debt limit really doesn't seem terribly effective in my view because it just keeps getting lifted. It could be argued that at least it does spark a public and political debate on national debt and the spending priorities of the government, of the US government. And it's also an opportunity to negotiate some broader fiscal reforms, such as there was a Fiscal Responsibility Act of 2023, and that included some spending caps. So you could make an argument it does have some benefit, but given the sizable US budget deficits we've talked about on this show before, it doesn't really seem to be having a substantial impact on the US budget, on prompting Congress to fix the budget and dealing with entitlements, which is where a lot of the spending is coming from. It doesn't really have much of an impact on that. So if we look at the Treasury website, there's a site, fiscal data, treasury.gov.au. It will give you the figures on the deficit, and for the fiscal year 2024-25, we see that there was $6.75 trillion of spending compared with $4.92 trillion of revenue, for a total deficit of, the deficit is needed to make up the gap between revenue and spending, so to cover the shortfall in revenue, a deficit of $1.83 trillion, which is, another bit of evidence, in my view, supporting the notion that this debt ceiling is rather ineffective. It doesn't really work to address the underlying problems. Other issues with it, one thing that seems obvious to me is that it doesn't really make a lot of sense to have a debt ceiling or a fixed or set in nominal terms, in terms of current dollars, because the economy is going to get larger, there's going to be inflation, and so hence having a debt ceiling in nominal figures, say 31 trillion, what if you have inflation, then that is lower in real terms, or what if the economy expands and the government could actually tolerate, it could cope with a higher level of debt without any trouble. So having a debt ceiling in nominal terms is a bit silly to me. So I'm not really a fan of it for that reason as well. I would say that I think Trump is right about the debt ceiling, and it's for those reasons the debt ceiling is ineffective, and also because once the decisions around revenue and spending have been made by the Congress or by the Parliament here in Australia or in the United Kingdom, the amount of debt you end up with follows from those decisions. It's not something that the government is choosing independent of those other decisions. So it's the revenue and the spending decisions that are the critical decisions. That's where the action is. That's where, if we are going to have rules that try to get better fiscal outcomes, that's where they need to act. The debt ceiling, all it seems to do is, once those spending and revenue decisions are made, and as we saw with those data for the US, with spending massively outstripping revenue, so spending on entitlements, Medicare, Social Security, and also the large national defense budget, arguably a necessary budget, but there is of course a lot of fraud, well, maybe not fraud, but a lot of waste in that budget. The Pentagon fails multiple audits, so there are concerns about that. Once those decisions are made, then the amount of debt really just follows from that, because the government needs to borrow the money to make up for the shortfall. So that's what needs to be fixed up. And given that we can't see any situation where Congress wouldn't agree to increase the debt limit unless they were reckless in a way, or unless they thought politically it would make sense for them to crash financial markets, although I can't see any logic in that, or political logic in it from their perspective, they're going to increase it, and hence the action's going to be on revenue and expenditure. And this is where, as I've talked about on this show before, the Trump administration is going to face big challenges, because Trump doesn't want to lift taxes. In fact, he wants to cut taxes, and he also doesn't want to cut people's entitlements, because he's a brilliant politician, really, and he knows that sort of thing is not going to be popular. and he's going to try and find a way to control spending which is politically beneficial or not politically costly for him. That will end up being difficult, I expect, because of the nature of the entitlement programs and how it's hard to see saving a lot of money there without making some unpopular decisions. So we've just got to wait and see what happens there. Now, I mentioned earlier that I have some experience with a debt ceiling. In fact, we had a debt ceiling in Australia for several years, from around 2007 to 2013. And this was set in what's called the Commonwealth Inscribed Stock Act. And I remember that act rather well because my team in Treasury, we were in the debt policy unit, we had to amend that Act of Parliament. I mean, it was a very simple amendment. We had to change a number in an Act of Parliament, so the bill was relatively simple. But we ended up having to do all of the paperwork associated with that, all of the briefing, all of the analysis. I mean, the AOFM, the Australian Office of Financial Management, it took care of all of the technical details and the borrowing the money, so big shout out to them. In the Treasury, we were looking at the budget and based on what we knew about the state of the economy, the state of revenue, the government's plans for a stimulus package. This is around late 2008. It wasn't long before Christmas. I remember we discovered that the revenue was much weaker than previously forecast, and that hence the second stimulus package that the government expected it would have to do, I suppose, or knew with a significant probability it would have to enact. It realised then that, okay, the time is right, this has to be done. And so the government suddenly has to start borrowing a lot of money. And the problem was that, I can't remember the exact figure, but at the time we would have had between $50 to $55 billion of Australian government debt, of bonds on issue. And in the Commonwealth Inscribed Stock Act, the limit was set at $75 billion. Now, I have no idea. I wasn't in the relevant team at the time that limit was set. If I were, I would have advised against it, because it became clear very quickly that we were going to sail well past $75 billion when we had deficits of many tens of billions in each year over the budget forward estimates. We had the financial crisis, and I think we would have had deficits of maybe 40 or something billion in 1 year. I'll have to check the exact number. But we had rather large deficits, and over the forward estimates, they added up to an amount that meant that we would be approaching $200 billion, so $200,000 million worth of debt. So we needed to change that number in the Commonwealth Inscribed Stock Act to 200 billion. So we had the bill drafted, we prepared the explanatory memorandum, and we also worked on the updated economic and fiscal outlook, essentially when we got back to Treasury after Christmas, and we did that in a very quick period in over January. And so it came out in early February 3rd, if I remember correctly. And then, everything sort of went a bit crazy in a way. The government announced, okay, things are much worse than we expected. We've got this new stimulus package. You can argue about whether that stimulus package was necessary or not, but regardless of whether or not the Rudd government had a stimulus package, we would have had to have increased the debt limit, the debt ceiling, because revenues had collapsed, particularly in company tax receipts, because companies, their revenues were down. Mining companies were making less revenue because of what had happened to commodity prices, and we needed to borrow more money. There was just no getting around it unless the government was going to engage in some sort of fiscal austerity, some perverse fiscal policy. And so we thought, okay, well, the government's come clean about what's going on. Everything's okay now. The AOFM, the Australian Office of Financial Management, will be able to start borrowing money and everything will be fine. Government won't have to worry about whether there's enough money in the bank, at the Reserve Bank, which, prior to getting that approval or prior to having the AOFM starting to borrow money again, that could have been an issue. There could have been an issue regarding whether there would have been sufficient funds in the government's bank account at the Reserve Bank. So we clearly needed to borrow money. Again, we needed to start the bond market up again, having larger bond auctions. and we needed to get that debt limit up to 200 billion. So what was a real surprise was when the then opposition leader, Malcolm Turnbull, announced that the opposition at the time wouldn't support increasing the debt limit. And this was a huge shock. Politically, you can see why they do it, but it still came as a big shock. And when you think about it, I thought it didn't make a lot of sense given that in Australia, there's been, since the dismissal of the Whitlam government in 1975, which caused a lot of political turmoil and divided the country, since that time, there's been a consensus that the opposition would not block a federal budget. It would not block appropriation bills, which would bring a crisis of supply if they block those bills. That's what happened in 1975. That's what led to the dismissal of the Whitlam government. So there's been a consensus that oppositions would support the budget, but here we had an opposition acting in a way which would effectively have blocked the government's plans with the budget, or its updated budget, its mini budget, you could call it, in February 2009. And so this was a rather extraordinary situation. And I remember at the time, we were scratching our heads about this. What's going on? I mean, it did end up getting it got passed at the end, I think, with Green support in the Senate. I remember David Parker, who was acting Treasury Secretary at the time, and I had to go up to the Senate to explain to Bob Brown, who was the Greens leader at the time, what was going on and provide some background in the situation. So it was a relatively tense time. And I guess the lesson that I took out of it is let's not have, one of the lessons is let's not have really silly fiscal rules like a debt limit of some kind, which ultimately just leads to political grandstanding, or at worst, I mean, if it actually did apply, then it could lead to a major financial and potentially wider economic crisis. So I'm not a supporter of a debt limit as much as I want to reduce debt, as much as I believe in sound fiscal policy. I think a debt limit or a debt ceiling is the wrong way to go about it. And hence, I think incoming President Trump is on the right track there. And I think, perhaps he's going to be the president who'll be able to get them to abolish it. I mean, he's got a lot of he seems to have incredible persuasive powers. So let's see what happens. Australia, by the way, we did away with our debt ceiling in 2013. So the new Abbott government, it sought to increase the limit to 500 billion, but ultimately it decided to abolish it, given that it's inefficient, or it's creates political risks. It's just not terribly effective. So I think that was the right decision. And I'd also support getting rid of the budget limit, the debt limit, debt ceiling in the US. And that's not to say that they shouldn't fix up their budget. They need to do that. That's an absolute priority. But I don't see the debt ceiling as being part of that. What I would suggest, and this is something I'll cover in a future installment, what I think works better is a rule on spending. If you have some rule or some guideline regarding government spending, then that can be potentially more effective, or I think it will be more effective, and arguably may be desirable. And rules to look at include the Swiss debt brake, and that requires that the national budget in Switzerland, that's balanced over the course of the business cycle, and that's achieved by having a spending ceiling, so a limit on the amount of spending linked to revenue levels adjusted for economic conditions. So it's a way of making sure that spending is commensurate with the sort of long run revenue growth. So you're not getting ahead of your revenue and not ending up with structural deficits. So that's the idea. You want a rule like that of some kind. Another rule that is popular is the Taxpayers Bill of Rights, which Dan Mitchell has called America's fiscal gold standard. And any revenue above the growth of population plus inflation, any additional revenue, that has to be returned to taxpayers, rebated. So it's a way of limiting the amount of money that governments have to spend. It means that they don't go and spend windfall gains in revenue, and that's seen as a particularly effective way of limiting government spending. That's that's possibly a bit more controversial than the debt brake. I think the debt brake's arguably got more to recommend it. I have some concerns about Tabor or just the nature of it, and I have to, I want to look at that a bit more closely before I recommend it. I'd be more likely to recommend the Swiss debt brake, and certainly, I mean, Switzerland's had very good fiscal performance since it's adopted it, and over the last couple of decades, and it has low debt to GDP compared with the Eurozone average, so much lower. And the figure I've got in my notes is 37% of GDP, significantly lower than the Eurozone average of 97%. So Swiss debt brake looks like it's a winner. Tabor, I'll analyse that in more detail in a future episode, because it's a little bit more complicated than the Swiss debt brake. So I'm not 100% confident in recommending that at the moment. Okay, so to conclude, I think that debt ceilings are a bad idea. The critical thing is to get control of spending relative to revenue. I mean, one option is to increase revenue, to increase taxes, but then that comes with economic consequences. I'd prefer that governments get control of their spending rather than try to close a fiscal gap, try to cover a fiscal deficit by increasing taxes. However, the critical thing is whatever they do, they need to get control of their budget, to get their budget back into black. And it looks like the debt ceiling, it doesn't really help with that because of the adverse economic consequences that would flow from a government being unable to borrow money when they need to borrow money because of the deficits that are being run. The political leaders, the Congress, they will always vote to increase the debt limit, the debt ceiling, and so it doesn't really have an impact on improving the situation. Okay, so overall, I think Trump's actually right on this one, that the US debt ceiling is ridiculous. Right, I'll be interested in your thoughts on this episode. Let me know what you think. If you have any views on fiscal rules that could be helpful, then please get in touch. Send me a note, contact@economicsexplored.com. Okay, thanks for listening.